wrong way.
Well, today we are having a conversation with the folks at Frontier Farm Credit. And joining us to do that is Lucas Maddy, Financial Services Officer with Frontier Farm Credit. And also joining us is Jack Rickabaugh, who is Insurance Service Officer with Frontier Farm Credit. And gentlemen, I appreciate both of you joining us today.
Thank you for having us, Greg. We really appreciate the time.
All right. So, gentlemen, we all know the agriculture industry has always had its share of challenges, and well, 2020 is no exception to that. And today, with today's environment too, how are you seeing things hold up from the financial end? Lucas, let's start with you.
Yeah, I appreciate that. Entering my 5th year, going into 5th renewal season here on lines of credit, I can certainly say that, 2020 is not without challenges. However, no year has been. We've had significant decreases in commodity prices. We've had trade relations go sour throughout this last half decade. And then if you look into the past beyond that, obviously many challenges that turn into opportunities for our producers. And so honestly, as we go into this fall and we look at renewal season, I certainly am very optimistic for the way that our producers, with the assistance that they get from Frontier Farm Credit, the way that they're going to be successful going forward in navigating these challenges and making them opportunities for success. So I am very optimistic, Greg.
Yeah, and to your point, there's always that opportunity out there. Despite all the challenges, there's still those opportunities really lying in front of that producer.
Absolutely. We see, obviously, there's been some government intervention. There have been some opportunities to market at a profit. And those are things that all take us back to one of the main tenets of what we try to get across to our consumers and our customers, which is to truly know your cost of production, to know what's important to you. How much do you need to get out of that animal? How much do you need to get out of that bushel in order to make a profit? And there's a lot of guides out there. University Extensions do a fantastic job of putting together a template for people to follow, but every single operation is entirely different. And so, we really feel like it's incredibly important for everyone to sit down and figure out their own individual cost of production and not take the word of what maybe the average is, because let's be honest, no one's average. Average is just a hypothetical. What we deal with is the specifics on every day.
Jack, in the insurance world, you see how real those challenges are and those opportunities can be as well. So what are some of the things that producers need to do to navigate the challenges and, as we just asked Lucas, take advantage of those opportunities?
Yeah, so like Lucas said, every operation is different. Obviously identifying the cost of production, what you have to get out to make a profit is something that they have to have. They also need to have figured out what are your goals, what are the hurdles that you have to come across in your operation through that cost of production and everything to make a profit. It's easier to identify where you can take advantage of those opportunities that you spoke about when you know what you have to deal with to make break even or profit. So understand your fixed and your variable costs, understanding, like Lucas said, what do I have to get per animal, what do I have to get per bushel to get me to achieve those goals. And it helps out if a producer writes those out, makes it based on their operation, because the averages that Lucas spoke to, those are just a guide. Everything's different. Everything is individualized, and producers really need to take an in-depth look at that to decide, hey, here's my opportunity. Let's take advantage of it.
I pose this question knowing that this really doesn't affect all farmers and ranchers, but to your point, Jack, do those farmers and ranchers do a good job, or do they need to do a better job of writing that down, really looking at the things you just talked about?
Yeah, I think everyone, it's goals are easy to obtain when you write them down. And sometimes, in the fast-paced world that we're in, it's harder to take the time to write those down. But I think producers do a good job of knowing where they need to be at. in terms of writing it down. I think everyone could be better at doing it. Let's go ahead and identify those things. It's a challenge to identify, hey, this is where I need to make a move. Folks, they have a decent understanding, and I think writing it down just makes it easier for them and easier to track, because they have a lot going on, and the challenges just create more time spent out working. The paperwork's not as fun, but it's important to do. So I feel like they do a good job, and it's helpful for everybody.
Greg, if you don't mind, I'd like to hit on that a little bit myself. Is that all right?
Yeah, go ahead.
Well, so one of the things we do when we sit down with our customers is we talk about the cash flow and what are the components of that. You have your variable costs, which a lot of operations have taken a significant focus on over the last 5 years in order to minimize those. And that's looking at your fertilizer, your seed, your herbicide, et cetera, et cetera. But what we find a great deal of variability when we start to analyze and benchmark these operations is within the fixed costs. Fixed costs would be things like family living. Is there additional off-farm income in order to support what it costs to actually put food on the table, put clothes on your kids' back, help them get through their school activities and such. Machinery cost has a huge variability in between operations. And so basically all that comes down to is dollars per acre. So now when we talk about a challenge and we talk about an opportunity, well, we've been faced with a huge challenge this year. There's no question. Just so much dynamic change within our industry. But what that's created is an opportunity for historically low interest rates. And so now what we're looking at is an opportunity to refinance today and view that in terms of the context of truly making a commitment to not just today and not just 2 years down the road, but literally multi-generational success. Today is an opportunity for someone to come in, refinance, re-amortize, and put their operation in a place in the driver's seat to be successful for 10, 15, 30, 50 years down the road when it comes to changing their cash flow in a manner that that they can be profitable year in and year out. So that's the question that I like to pose to potential customers is how can you set up your operation for long-term success, not just short-term?
Because one of the things to look at on that, Lucas, is variable costs. And we know in so many aspects that can differ, but that really is just the start of the process too.
Correct. I mean, you still, at the end of the day, you've got to put seed in the ground. You've got to put cattle in pasture, and you've got to put herbicide on it, chemicals, and you've got to put fertilizer on it. Those are things that you have to do. And then you get to looking into the things that, where can we make a change that's beneficial to our operation that may be a short-term change, such as seeking off-farm income or refinancing and re-amortizing the long-term fixed debt that we have. We're in an environment right now that I personally have never seen, where you can take a 5 or a 10-year loan and you can turn that into something that could either be refinanced at the same amortization, the same amount of years for a much, much, much lower rate, or you can take that and stretch that out over a much longer time frame with still a lower interest rate and give yourself the opportunity to have a lower yearly payment. And so that's going to come back in, and that's going to mean less dollars per acre, less dollars per unit of livestock that has to go in order to contribute to paying that down. So huge opportunities for people in today's market.
We're joined now by Lucas Maddy, who is a financial services officer with Frontier Farm Credit, and also Jack Rickabaugh, insurance services officer with Frontier Farm Credit. So Jack, once a producer gains that good understanding of their cost of production, let's say, what can they do next?
So after you know the cost of production, then you can start to identify those prices that we would call like a break even, when they need to pull the trigger, when they see that price on the board. And also it gives you an ability to look out further into future months to see if you can actually make more money, than at your break even. It just kind of helps you design out a marketing plan. It also gives you a basis of where to start your risk management plan. Once you know what you have to cover, let's make your insurance plan to where we are protecting the inputs, the variable and the fixed costs that Lucas spoke to. Your insurance plan needs to protect that. When you have those all drawn out and identified, it's really easy to make a plan based on those numbers.
Well, when you look at risk management, then, Jack, what are some of the tools and resources that producers can take advantage of when it comes to risk management?
Yeah, today there's more products available to producers than ever before, and they're becoming more dynamic and more powerful every day. We went from where you could just protect your yield, now you can protect your revenue, and you can even protect margin. There's a variety of products that protect livestock, protect pasture and hay ground, and then also to protect the row crop production. So there's a variety of products that are out there. Really, it's meet with the producers, figuring out what they have at their exposure and what risks they need to cover, and then making a plan that fits their individual operation. There's not a one size fits all, so we'd make everything customized to that operation.
So, Lucas, are there other things a producer can do when they know their cost of production?
Absolutely. Knowing your cost of production it allows you to make in-season managerial decisions, obviously. So, if you know that you are already marketed at or above your cost of production, and you also know that you talked with Jack or another insurance officer, and you were able to protect what you're going to market, that allows you to make those decisions in season. For example, right now, we've been seeing a lot of rain across the area, and I think that we're going to be looking at a fantastic fall corn harvest and probably a very, very good soybean harvest. In some cases, that may be a little behind, but now's the opportunity to put pencil to paper and say, look, I knew that I was going to make X number of bushels because I had that guaranteed through my protection plan. But now I'm looking at being able to produce far up and above that. So maybe now's the opportunity that I take another fly on pass with a fungicide. Maybe now's the opportunity that I add some sort of bump fertilizer in order to get that extra top end yield, because I already know that I'm going to be above and beyond my cost of production. But then you take that into a multi-year approach and consistently do these things year in and year out, where it just takes a lot of variability and it takes a lot of guessing out of the game. And it allows our customers to have a much greater comfort and state of mind when it comes to making these decisions. And we all know this is a stressful game. Our ag producers, our farmers and ranchers, these are the people who got off the wagon at this point, and they decided this is where we're going to make our stake and this is where we're going to make our fortune. And so these guys, males and females, sorry, I didn't mean to skip that, but these producers are fantastically open to taking risk, but knowing what that risk entails, that allows them to do so much more.
So, Lucas, what might be some ways a producer can look at impacting some of their fixed cost structure today?
Right. Okay. So fixed cost structure. Let's take a talk about that. So quick things down the road on fixed cost structure. You're going to have probably some long-term real estate debt. You're probably going to have a good knowledge of what your fixed family living expenses, machinery cost, and then what we would call installment debt. Maybe you made some improvements to a livestock facility, or maybe you put some terraces out and you had to pay for that as well. So let's take a look at what it could be, what it could mean in terms of changing the face of your operation to refinance that, to take a look at current interest rates, historically low, and the opportunity to re-amortize that over a longer payback period in order to create more cash flow that will allow you to be at a lower cost of production going forward. And so you can make that decision today, and that decision today could impact your cost of production for up to 30 years. We do real estate loans all the way up to 30 years. So that could impact your cost of production for the next 3 decades. And that's something that I mean, like I said, this is an opportunity that's never really been seen within agriculture, and it's created an opportunity out of a challenge that I think a lot of savvy producers are going to take advantage of.
Gentlemen, as we wrap this up, and as we look at this, you both represent Frontier Farm Credit. So I ask you a simple question. Throughout all this, how can Frontier Farm Credit help these producers and ranchers?
Well, Frontier Farm Credit is established in order to serve agriculture and agriculture only. We take a multifaceted approach. Obviously, I work with operations on the strong production side. We have a specialist that works with operations that are more of a part-time and investor side. And then we take that multifaceted approach and we bring in the insurance expert, such as Jack, and we bring in other experts that are able to help assist in developing a holistic plan and a holistic approach. So, I would encourage people to go out to frontierfarmcredit.com to look up and see what they can take advantage of, or just calling their local office.
So, Jack, from the insurance perspective, how can Frontier Farm Credit help?
Yeah, so as a farmer rancher owned cooperative, we're trying to protect the folks that work with us and just lock in longevity of their operation. That's our main goal. I think we have a very good ability to help our producers take less risk and lock in more money. That's what insurance does. Your revenue protection insurance is guaranteeing you bushels and guaranteeing you revenue. So, like Lucas said, I'd encourage every operator to reach out, find your local Frontier Farm Credit office, get in touch with a financial officer or insurance officer, and sit down and talk about the operation that you have, what your goals are. Really make a detailed list of what are your costs, what are your goals, and see if the plan that you're currently using is working, or if there's any opportunities that you can take advantage of here in the future.
All right, gentlemen, we're out of time. Jack Rickabaugh, Insurance Services Officer with Frontier Farm Credit. Thanks for joining us today.
Thank you.
And Lucas Maddy, Financial Services Officer with Frontier Farm Credit. I appreciate you joining us today.
Always a pleasure, Greg. Thank you for making the time.
And this has been our conversation with the folks at Frontier Farm Credit.